Okay, guys, I'm super excited to be talking about, talking today, right? We live in an age of cryptos, grey market premiums, and I'm a value investor and nobody talks to me. So, किसी ने बुला लिया वही बहुत बड़ी बात है. So much so that my daughter goes down and tells everyone that my dad is into crypto investing. And I said, Beta, but why? She said, it sounds cool. You know, nobody knows what's value investing. So, yeah, I think, I have a very exciting topic. As I said, people have spent a lot of money coming here. People have spent a lot of money registering. And so I don't want to bore people with value investing, right? Otherwise, people might just end up calling Jatin and asking for a refund. So the topic that I've chosen for today is the drug that the world is on. Any guesses on what this drug is? Okay, very close. No. Yeah, data is okay. It's a drug, but that's not what I'm going to talk about. So. No, I think liquidity and more importantly, money printing, right? I think so. We've done a lot of work over the last 1 week or so, and we focused on. So Jatin called me up and he said, "You have to make a presentation." And I was thinking for the last 10-15 days, what do I talk about? Right, and that's where we did some work. We looked at our previous clubhouse sessions and we said, okay, we will discuss money printing. So first, to understand money printing, we need to understand the concept of money. Okay, why is money so important for all of us? Why is, right, we look at it, we say our health is the most important aspect for us. Our life, right? If our life goes, everything goes. But we worry about our health only when it goes for a toss. Rest of the time, we are all busy worrying about money. 24/7, every single person out here, whether we are in the financial markets or not, right? Everybody is out there, right from the neurosurgeon to the auto rickshaw driver. Everybody wakes up in the morning trying to earn money. Why is money so important? Okay. So, I believe we are part of the animal kingdom, right? We are part of the animal kingdom, and in the animal kingdom, majority of the animal species throughout their lifespan, they end up doing only 4 things, right? One is searching for food. Second is avoiding being someone else's food. Third is territory, and fourth is mating. So and I believe we are part of the animal kingdom, and if you take all the activities that we do, eventually we can trace it back to these 4 primal activities. A major portion of it. We've evolved in certain senses, but a major portion of our activities will trace the roots back to these 4 activities. And what is the source for achieving all these 4 things? What's the source for achieving all these things? Money, right? Right? So, we need food, we need money, we need to avoid being someone else's food, that is, we need to worry about a life, we need to medical or living in a better country or a better housing society, right? We need money. Our partner depends upon our social status. So, money is very, very important, and it hits at the root of all of our emotions. So I think we'll spend a little time trying to understand money. We've been around for millions of years. But money as a concept has been around only for 6,000 years. Before that, we were hunter-gatherers, we were scavengers, we got into barter, but there was no money before that. Maybe there was, we have no recorded history about it. And money changed things a lot. I believe the human race, money has played a very important role in the development of human race. At the end of it, you could unitize every single transaction, right? Earlier, it just depended upon somebody's whims and fancies and somebody's desperation. So money led to a lot of innovation and probably led to a lot of, growth as far as the human species is concerned. What is it so when it started 6,000 years back, right, it started off with coins, it started off with Probably before that it might have started off with bones, but essentially what we're talking about is it started off with coins: gold, silver, copper, aluminum, nickel. And here today, just to understand, we'll just focus on one aspect of this, which is gold, right? And we've all understood gold as the single most important currency historically. There are several reasons why gold is so important. Again, a lot of you guys over here sitting here might know that, but we're also speaking to a much wider audience online. And I'll just slightly, some of the things I'll just try and simplify. And Jatin, in case you feel that I need to simplify it a little more for our online audience, please do let me know. So what makes gold so important to mankind? Or why is it that it has held so much importance in our history? First and foremost, gold is extremely scarce, right? So I don't think so gold was, from whatever I've read on the internet, gold is something which got deposited on the earth because of either collision of stars or some meteorite came and hit the earth and carried some gold with it. But gold is not something which is endemic to the earth. So gold is extremely scarce. How scarce? Well, we've only mined till now 2 lakh metric tons of gold. All the world in the gold that has been mined till now is 2 lakh metric tons of gold. That's the amount of steel that we produce in 1 hour every day. So next time anyone tells you that, gold is this, tell them this is the difference between steel and gold. So one, it is very scarce, and anything that is scarce tends to do well. Right? Second, I think it's a great store of value. It's a very, very good store of value. The only better source of value other than gold is diamonds. But diamonds are not standardized. Gold is. So second, it offers standardization. Third, it offers extremely good store of value. All the gold in the world can be stored in a 60 cubic feet storage tank. That's it. So imagine how easy it is to store gold, how valuable it is. It's an extremely dense material. Gold is extremely malleable, right? And if you look back throughout history, throughout cultures, jewelry has been very popular across cultures. This was before the ships were invented or everything. You go to any of the, right from Australia to the Indian Americans, everyone had jewelry as a part of their culture, right? What is the material which lends itself to best as far as malleability and making jewelry is concerned? Gold, right? And that is 50% of our better halves who want jewelry, and they control 100% of us, right? So yes, that is why gold is extremely important. Gold does not decay, right? Gold does not decay. So it's again, gold is a fantastic this. So whenever your grandmothers or your mothers or your wife said, let's buy gold, I think they were right. Right? So this is it. For a large part, gold represented currency. Then one fine day in 1793, the Bank of England said, you know what, we got to be very, very careful about governments, right? Whenever they ask us for our money, be very careful. It happened in Demon as well, right? We were promised sab theek ho jayega, but nahi hua. So 1793, the Bank of England came and told everyone, look guys, gold is very difficult to carry around. It's very heavy. Let's do one thing. We'll give you a promissory note. Our note is a promissory note. If you read it, it's a promissory note. We'll have a promissory note where we will tell you, okay, you deposit our gold with us, and we will give you a paper currency. That, my friend, was the biggest scam. The first big scam, that was this introduction of paper currency. And slowly and steadily over a period of time, people all converted their gold into paper currency in the hope that governments at some point in time will, honor the promissory note and turn the paper currencies. At any point in time, you could go to the Bank of England, tender your note and get your gold back. And it was all fine, right? It was all fine. So gold as a currency provided a lot of stability. One, as I said, it was scarce, and then there were other coins as well. But till the time, this all was very well throughout the last 300, 400 years. Obviously, there were wars in between, World War I, World War II, and countries did end up devaluing their currencies, but those were very temporary phenomena. All that changed in 1971. So I don't think so. The biggest scam that Richard Nixon did was not the Watergate scandal, but it was one fine day waking up and saying you cannot convert your US dollars into gold. And that's when everything changed. So yeah, we are all out here. We feel we've become a lot richer. We are doing extremely well. But what has happened? What has happened since money printing? Right? The value of gold, which was pegged to the dollar, there was no increase in gold prices. There was no inflation for nearly 300 years. It's gone up 80x in pound terms since then, and 250x in the INR terms since then. And we're talking about the Sensex having returned 600x over that period. Right? Adjusted for hyperinflation, hypertension, I think gold has done better than Sensex. Right? With gold, you didn't have to worry about 9/11, global financial crisis, COVID, any of those things. On those days, in fact, gold was higher. Right? So, and more importantly, all the companies that were there in the Sensex, probably a lot of them don't even form part of that. They all came in at a much later date. A lot of those companies did not even exist. So I think gold as an asset class, as I said, has done well. And it has helped, particularly remember this point, this is very important. It has helped the financially illiterate in the country to protect their wealth. We're a country of financial scams. I've repeated it time and again that, a financial scam is a bigger scam than murder. Because when you do a financial scam, you send millions into poverty. So, yeah, this is what has happened to the money supply, as I said, since 1970, the money supply has gone up 31x. So, just assume that if you were, we'll take the clock back, and if I tell you, okay, you have $1 million today, and most of the people today I read on Twitter and they say, we have $1 million and we want to retire. And if that amount that you needed in 1971 was $30,000, the value of your currency has deteriorated by nearly 97%. The value of the currency, the promissory note, has decreased by 31%, by 97%. This is the money supply growth over the last decade. Since 1991, it has gone up 7x. Again, and more importantly, till the global financial crisis, the money supply increase was fairly stable. Right? It was fairly stable, so nobody realized it. The financially illiterate never realized this. That the money supply was increasing, they thought their salaries were increasing. But way back during the times of gold standard, by the time you started your career and by the time you ended your career, probably your salary over a 30-40 year period only doubled. But you were equally well off. Right? And none of this money supply creation has helped in innovation. A lot of the innovations that we still use happened well before this, right from telephones to railroads to mobile phones to laptops to all these things. What happened? Global financial crisis. Ben Bernanke, right? His claim to fame, he studied Great Depression in detail, in depth. And he said there's only one thing that we need to do whenever we face depression. There is only one this for all ailments, which is money printing. right? And he printed money like anything. So money supply just in the last 10 years has gone up by 3x. So the value of your money has deteriorated by 75%. The value if you just kept cash has deteriorated by 75%. Before global financial crisis, nobody knew about the Fed balance sheet. Nobody, not anyone even in the US tracked the Fed balance sheet. And all of a sudden Ben Bernanke came and said, wow, this is a fantastic tool. We will print money. And nowadays you don't even need to print money, right? It's just a digital code. And it's a code which is simpler than cryptos. So the money is being created digitally and you're just buying assets and infusing money into the system. Correct? And so here's money. Here's I'm taking you through what money is done over so many years, right? And typically what we have read in economics. So one thing I want to tell you is when Ben Graham wrote his book, it was 1929, that was the gold standard, right? All those theories are way off right now. I'll be honest, I'm a big fan of Warren Buffett and Ben Graham, but those theories in this day and age don't hold true. Because, right, what we've heard about how is exchange rate determined, either it is trade parity or interest rate parity. We had a $23 billion trade deficit and the currency didn't budge. Why? Because it's now the world is driven by capital flows. It has got nothing to do with trade. It has got nothing to do with interest rate arbitrage. I'm sorry, but you'll probably not be taught this in B schools. So all this money printing, we thought, wow, this should lead to inflation. That's what we've been taught in economics, right? And you had the mother of all money printing. I remember CNBC US, Rick Santelli and somebody else arguing in 2009-10 that there's going to be massive inflation and this and that, and inflation didn't happen. Last 10 years, from 2010 to 2020, you had zero inflation, or virtually zero inflation. But did we have zero inflation? Are we measuring inflation correctly? Right? Is in today's day and age, measuring inflation by way of WPI and CPI correct? We'll explore that going forward, right? So we had no inflation. Inflation has only come back in the last 1 year, right? Very low interest rates for nearly a decade, very low inflation. So no inflation. Fed says, oh, we have a 2% interest rate target. Inflation nahi aa raha hai, let's print more money. There was no question. Earlier they used to talk about, at some point in time, the Fed balance sheet shrinking. Today they say we'll run into perpetuity. There was no wage growth. There was no commodity price inflation. Right? So, but it's very important to look at the commodity price chart prior to that, right? Prior to 2010. So what happened? Why was there no inflation from 2010 to 2020? Can anybody tell me why there was no inflation? Okay, so we've all heard about reversion to mean, and reversion to mean happens over a longer period of times, longer than most people's memories are. So from 2001 to 2007, we had the mother of all bull markets as far as commodities is concerned, right? Prices of steel, copper, aluminum, everything went up between 5x to 10x. Even gold went up 7x over that period. So we had massive commodity boom driven by China and whatever you want to call it. Obviously, what happens when there's boom? There's a lot of capacity addition. And a lot of capital got allocated to the commodity space in 2007. At the boom of 2007, which came on stream in 2010, 11, 12. That's what shale oil is, right? That is what shale oil was, which eventually drove stock prices down. Oil prices down, sorry. So a lot of investments in commodities, oversupply, and there was no inflation, the WPI, CPI. So this is the 10-year bond yield. Last 10 years, not done anything. Last 30 years, not done anything. You really want to understand the impact of interest rates? You should read Warren Buffett's letters from 1979 to 1980. Right? It was really a very dreadful situation. And we have a generation, we have 30 years of people who don't understand what interest rates are, what inflation is. Just trying to understand what was the impact of this on the bondholders. Right? Bonds in the US on an average have yielded 2% over the last decade. Right? And with the money supply growth that has happened, if you owned 10% of the bonds at that point in time, because of the money supply increase and the low yields that you were getting, your value has deteriorated by half. Instead of owning 1%, you today own 0.5%. But there's a bigger catch. It's not just 0.5%. Right? All the money that got printed, where did it go? It went here. It went into cryptos, it went into stock markets, it went into real estate, it went into NFTs, it went into asset classes. And who owns assets? It's the rich who own assets, right? So if the stock market has gone up, it's not because I'm more intelligent than any of my peers in the class. It's just that I understood this better than a lot of other people. Right? And very conveniently, the Fed forgot a lot of these things and they said, no, we're not looking at this. We're not looking at asset bubbles. But what you have to realize today is a significant portion of global wealth is today locked in assets. It is not locked in factors of production. So the factors of production suffered very, very badly over this. So your relative value of bond, if there was a person who retired 10 years back and if he had a sound financial advisor and if he told him put some money in bonds, those bonds are practically worthless as a percentage of global wealth. They're practically worthless as a percentage of global wealth. One, low interest rates, you're not compensated. And second, there's a boom in all other asset classes. This is the real interest rates that you're looking at. They currently, we have two cases here in the early 70s and the late 70s where real interest rates were very high because that was also a time when inflation was very high. Right? And typically when inflation is high and the central banks are raising interest rates, you are going to find that the market is expecting or pricing in a decline in inflation going forward. Here you've had a scenario, for 10 years, we've had virtually negative or zero real interest rates. And then this is what happened. This is where your real interest rates are. So for 10 years, you've not made any money on your bonds, and today you're staring at a situation where you have inflation coming back and you're not yielding anything on your bonds as yet. As I said, we all talk about the greater fool theory, and if this is the silent inflation. This is the silent inflation which has left a lot of world's poor behind. Never in history has there been such a disparity between the rich and the poor, right? You have Elon Musk and Jeff Bezos. Really, have they created so much that they are more wealthier than 99.9% of the population? Right? Means we really need to question this. So how big is the bubble? Again, right? We need to understand. Last 1 year, 140, 150 stocks have gone up 10x. We get a unicorn every single day, practically, right? We have NFTs, we have cryptos. I know Balaji is next after me, but what's crypto, right? It's a bubble eventually. I love the concept of Bitcoin, and I'm a big fan of Bitcoin as a concept. It really put pressure on the central banks. The guy who created it is a brilliant guy. But eventually, like all good things, it'll eventually lead to a bubble and it'll burst, and people are going to lose very heavily in cryptos over a period of time. I don't know when this bubble ends. You never know. So this is the South Sea bubble. It nearly brought down the British economy, the UK economy. And how much did the stock price rise during the Stock Sea bubble? 10x. That's it. 10 bagger though we make for fun, right? Because Last 1 year, 150 stocks have gone up 10x. So yes, we need to appreciate that it's not our skill. A lot of times it is also because of the largest of the central banks. More important, this is the most important slide according to me. Okay, this is where it all boils down to. What is the value of an asset? The value of any asset is the present value of its future discounted cash flow. That's it, right? If I buy a stock, it has to yield me some dividends. If I own a real estate, it has to yield me a particular piece of rental. If I own bonds, they have to, I'm parking my money, I'm giving you money, you ought to owe me some bit of interest rates. But today, because of the massive money printing of the last 10 years, okay, and this got exaggerated after COVID. The central bank said no inflation. The US became arrogant and they said we can print as much as we want because there's no inflation. Today, you're not getting any yield on any of your asset classes, including cryptos. Cryptos is zero yields. But what does that mean? In the end, we're playing the greater fool theory, right? That means we are only hoping that somebody will come and purchase it from us at a higher price. We've all read about it. We're actually experiencing it. I'm not bearish on the markets, by the way, guys. I'm fully invested. So, yes, as I said, it was a cocktail. It was a cocktail of low inflation, low interest rates, massive increase in money supply, and we thought we were all very intelligent. We made a lot of money. Yes, what do I expect going forward? Yeah, this is a very important thing. So what do I expect going forward? I think the inflation is going to come back. Why is inflation going to come back? Very simple reason. No investments in a lot of basic industries for 10 years. Okay, and what happened during COVID? A lot of the weaker players went bust, right? So again, as I said, I always believe in buying the best companies in the industry because you never know which stage of the cycle you are in, and eventually, so I own one company where the number one player is still alive and number 2, 3, 4, 5 have all shut shop during COVID. So because of money printing, demand is back, supply is not there. And in the last 12 months, because we never saw money printing like this before, we have seen increase in prices like never before. Right, I fly domestically, we can't fly internationally, but I get the feel that I'm traveling internationally because the fares have increased that much. Right, so yes, I think reversion to mean will happen over a period of time. Can the Fed taper? No, it cannot taper. Has money? It will taper, right? It will taper. But has money supply ever gone down in the last? Has money supply ever gone down in the last 31 years? No. Not in a single year has money supply gone down. So money supply is going to increase. The pace is going to go down for sure. The Fed will have no option but to increase interest rates. Inflation is really beginning to hurt. Why are airline fares so high? Because there's no supply left. Why are steel prices through the roof? Because there are only 6 companies left. A lot of these smaller guys have closed down. And it is not just true in India, but it is true all over the world. You think shipping? You think there is a cartel in shipping? No. There has been no investment in the shipping industry for the last decade. And all of a sudden with the money printing and everything, world trade has shot through the roof. So inflation is going to be here. Right? Fed will have to increase interest rates. Money supply will increase at a gradual pace. And so will Fed's or central bankers' expenses, which is interest rates. Right? Again, coming back to this concept of, fiscal deficit. I'm just diverging a little bit here. We've all been fooled in terms of fiscal deficit. They say fiscal deficit is 4% of GDP. That's a bullshit measure of measuring fiscal deficit, right? When I was a young analyst, I said 4%. I read the budget and I did the math and I said, they're spending 50% more than that they're earning. I said, the government is spending 50% more than what it is earning. But what the government is doing, the government is measuring, that is a fiscal deficit, right? What they spend in excess of what they earn. But they're comparing it to the GDP of the country. That's like me spending more than what I earn and then comparing my deficit to the income of my entire society, which is a pretty large society. So I can really run rampant over there. But unfortunately, I have to repay my debts at some point in time. So fiscal deficit, again, as I said, we've been all fooled as far as fiscal deficit is concerned. It ought to be measured as a percentage of government's revenues. So reversion to mean is likely, as I said. I feel that commodity prices over the next 3, 4, 5 years should do extremely well. Supplies take time, right? You want to set up a BOPP or a BOPET line, there are only 2 manufacturers left for capital goods. And you order a line today they are saying it will take you 3 years. You really don't know what kind of shortages are going to come along the way. Who knew shipping was going to be this risk? So normal economic sense tells you that some of these sectors should do extremely well, and only over a period of time we will have capacities coming in. These people have suffered really badly over the last 10 years. I was discussing with Brijesh, he works with Sada Energy, and nobody's talking about capacity expansion. So reversion to mean will happen. I think interest rates will rise. Wage inflation is here. We're talking about 50% wage inflation for the IT industry, but they didn't get any wage increase for the last 10 years. And they didn't need it, right? Because there was no inflation. iPhone were available free. You just needed to pay your monthly bills. And yes, I think gold, trust your grandmothers, mothers and wives, and I think adjusted for everything, gold should continue to do well. So I made my first investment in gold. The wife is happy. And on that note, I end my speech. Thank you. Thanks for bearing with me. Bye-bye, guys.